Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 9th of December 2021, and we're publishing our gold and silver daily update, news and economic data. Gold and silver have dipped this morning, in part due to CPI data due out tomorrow and the prospect of further Fed tightening should these figures rise as high as some economists and traders are predicting. So let's take a look. Welcome to Illuminati Silver. It's Thursday, the 9th of December 2021 at 09:51 in the morning. The weather today is breezy and promising. Yes, we've had tempestuous weather, we've had tumult weather, we've had confusing weather too. But today, the sky is relatively clear, just one or two clouds on the horizon. Slight wind, breezy. It looks like it may be a promising day, which is more than can be said, perhaps, for the equity markets, because the headline this morning is Evergrande declared in default as massive restructuring looms. China Evergrande Group has officially been labelled a defaulter for the first time, the latest milestone in months-long financial drama that paves the way for a massive restructuring of the world's most indebted developer. Fitch Ratings cut the developer to restricted default over its failure to meet two coupon payments after a grace period expired on Monday. The credit assessor said the developer didn't respond to requests for confirmation on the payment and is assuming it wasn't made. The downgrade may trigger cross defaults on Evergrande's $19.2 billion of debt. To some degree, the markets have been expecting this. And Evergrande on its own may not be sufficient to seriously irk those markets. The issue, however, is the contagion that may develop from this, because there are a host of other companies depending on Evergrande's largesse, and also other companies in similar positions. And it is this we must watch out for, and to some degree, coupled with other geopolitical issues, could be the catalyst for the vast market fall that people have been predicting for some time. We don't think it's going to happen quite yet, but we can see the tensions building. We can also see building the desire of our governments to increase our taxes, because after all, we've gone through 2 years of subsidy for the coronavirus. It has to be paid back somehow, otherwise they leave it to the national debt. And what's perhaps alarming me is perhaps for the first time in the UK, they may be considering taxing us on our property appreciation for the home in which we live. Second homes, speculative investments, that's fine. But the home in which we live, UK homeowners enjoy a £3 trillion untaxed property windfall. British homeowners have enjoyed a £3 trillion untaxed wealth windfall from rising property values over the last 20 years. That is unlikely to be repeated, with the bulk of riches, here we go, going to the well-off, the over 60s and those living in London. Well, let's make this clear. No doubt, London and the South East has had the main rise. That's where the wages are the highest, but it's also, to some degree, where, let's be quite candid, the quality of life is not as great. Or at least, shall we say, if you want a comfortable, tranquil life. If you like the hustle and bustle and partying into the night, then London is terrific. That said, we have all, with one or two very minor exceptions, seen our house prices rise, but it's all relative. Because if we are taxed on those rises, one, it's going to encourage people not to buy property. And secondly, it'll encourage people not to continue to invest in their property to increase its value. And thirdly, it's just an excuse for a tax. Because if we sold that property and moved to another, well, that price will have risen too. So unless we're downscaling, we're not really that much better off. In a report calling for gains to be taxed, the Resolution Foundation said the surge in house prices since 2000 that has turned many homeowners into millionaires has been driven primarily by falling interest rates. House prices have risen by 86% more than inflation this millennium, delivering £3 trillion of capital gains on homeowners' main residences alone. Under current laws, gains on first homes are untaxed. Although this tax treatment has largely been a matter of political consensus in Britain over recent decades, the scale of gains are far beyond anything envisaged by any policymaker, Resolution said. The gains are unequal, unearned and untaxed. The windfall has not been evenly distributed. Existing homeowners gained the most, particularly those who were fortunate to buy in the late 1990s and early 2000s. The danger with this policy, of course, is if house prices go down, can you claim a tax rebate? I don't think that's mentioned in the article. Reuters are focusing on what's been going on in the UK again. Johnson imposes COVID-19 Plan B in England to contain Omicron. British Prime Minister Boris Johnson imposed tougher COVID-19 restrictions in England on Wednesday, ordering people to work from home, wear masks in public places and use vaccine passes to slow the spread of the Omicron coronavirus variant. Compared to some other countries, his recommendations are mild. Let's see to what extent all of our countries will find ourselves in near shutdown. Because if that happens, unfortunately, the economy will grind to a halt. How Plan B will affect the economy, nightclubs, restaurants and shops could be hit by new COVID curbs, but many firms are well placed to cope. As we've said, it's still serious to many, but at the same time mild compared to some other countries that are fining people, threatening imprisonment, and other forms of draconian measures. US and Canada. Quite a bit on the Epstein-Maxwell case, of course. Lawmakers to hold Trump chief of staff in contempt. And Africa needs China and the US to work together. And also, we mentioned the Olympics yesterday. UK and Canada officials to boycott China Olympics. This means their diplomats won't attend, though their athletes will. Dollar index marginally up this morning, although it did fall a little bit yesterday, but still holding above 96 at 96.08. Energy prices broadly unchanged, marginally down, but still holding that $72 to $75 level between WTI and Brent crude. Equity markets broadly in positive territory in the US yesterday, but that was after a previous day quite significant rise. Asia Pacific markets mixed. Hang Seng is up 1%, but the Nikkei and Topix indexes are down 0.5%. And this morning, markets are open in the UK and Europe, and we can see that the European markets are broadly up and the UK markets are broadly up. But we are talking only 0.1% on average. US economic data to take note of. Yesterday we saw job openings rise to actually 11 million, and we saw job quits fall, just ever so slightly compared with the previous month, to 4.2 million. Nothing really that exciting here, to be quite candid with you. Today we have the initial jobless claims. This will be noteworthy, depending on how far the deviation is. But the key information that's going to move markets, and we're already seeing gold and silver being affected today by a potential increase in the consumer price index tomorrow. We've got inflation in the US riding at about 5.3% as it is calculated. Many are expecting a 0.7% increase, which will take it over 6% on an annual basis. If it does that, then there is almost no doubt that the tapering not only will continue, but could be made more severe, or at least the threat of it being more severe, and of course the threat of early interest rate rises. And this is why we've seen this morning, to some degree, gold down, not a huge amount, but down $6 at 1,782, and silver down 13 cents at $22.32. And as we've said, if we're going to have higher inflation, higher interest rates, lower economic growth, unfortunately, silver will suffer, certainly compared with gold. Cryptocurrency markets staged a recovery day before yesterday, but over the last 24 hours, and this morning we noticed particularly, we've seen Bitcoin start to dip, not hugely, but down about 1,000 at $49,257. And most of the cryptocurrencies, with a few exceptions, but most of them in negative territory this morning. That's it for now on this rather breezy but promisingly calm day. We hope you remain calm. We hope you remain prosperous. And we hope, of course, that you'll give us a thumbs up, subscribe, and press the bell sign. And until tomorrow, have a great day. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.